Okay, thanks very much, everyone. Thanks for your patience for those of you who got here early. For those of you who don't know, my name's Paul Barnes and I'm the Managing Director of MAP, and we provide a full outsourced finance function specifically and exclusively to digital creative agencies. So we're helping with everything from getting your accounting data right through to compliance, statutory accounts, VAT returns, payroll, tax, year-end accounts, management reporting, budgeting, forecasting, and generally being your right-hand man, FD, in board meetings, etc. So we help agencies that are perhaps not quite at the size where it makes sense to build an in-house finance function, but they've outgrown their arm's length accountancy firm. Many of you who are on the webinar today are already clients of ours, so I'm already familiar with many of you. If there's any questions you want to ask during the webinar, then just slot them in the chat and I'll answer them all at the end. Today we're going to be talking about building finance systems within your agency. So by scalable, automated, and insightful, we mean making sure that you are able to effectively produce financial information that you can trust, and that is not easy to achieve. Many business owners come to us and they talk about being able to make better decisions from their finances, but whatever great reporting we put in place and whatever great KPIs we put and great initiatives we put in place, if the data is not right in the first place, then you can have the best looking reports, but they're not actually useful within your business because they're not telling you the truth about what's going on. And there's a lot of work that goes into just getting the fundamentals right to make sure that you can produce reports that you can actually rely on. So if you could just make sure that for the next half an hour or so, you make sure you switch all your notifications off on your laptop and get the most value you can from me while we're here, and the most value from the presentation. Feel free to keep in touch after the webinar. We're on Facebook. We have a group that's specifically for agency owners and their teams, where you can talk about challenges that are going on in your business and ask questions from other people going through the same journey. We're also regularly posting on Instagram and Twitter with relevant and useful information to help you to better build your agency. So feel free to follow us on Instagram and Twitter as well. So today we're going to be talking about accounting systems, which might not sound like the most exciting topic, but the reality is you're never going to be able to make the most informed decisions within your agency if you don't have access to financial reports that are useful and insightful within your business. And the ability to get that trustworthy information requires so many inputs of data sources that it's no wonder it's so hard just to get data that you can trust. Many of you that are on here today will already work in data in one form or another, and you might be involved in integrating systems, etc., and you'll understand the complexities of that are often much harder than people might initially think. So we've got all this wonderful technology available to us, but somehow we still end up feeling like we want to tear our hair out because we're not able to run reports that we can trust. But if you think of everything that now goes into the modern accounting system, which is far more sophisticated and far more advanced than it's ever been before, at the same time, there is so much that can go wrong. So you have bank feeds coming in from your bank accounts. You might have current accounts, reserve accounts, PayPal accounts, credit cards, all coming through into your accounting system on a regular basis. If you're using something like Xero, which is what most of our clients use, you might have integrations with a payment gateway, so something like Go Cardless or Stripe to make collecting payments far more efficient. You will have perhaps zero touch on your phone, where you and your staff are claiming for expenses that you want to expense from the business. You have perhaps a CRM that's integrated with Xero, either natively integrated or through a third party like Zapier, and that's helping you to set up new contacts, raise invoices, etc., based on deals that you've won. You might have an HR system that's tracking your team, starters, leavers, hours, holidays, etc., in order to create your payroll at the end of the month in Xero. You might have salespeople who are manually coming in and creating invoices. You might have an accountant or a bookkeeper who's coming in and reconciling transactions. You have employees who are running reports, editing data. You might have account managers who are responsible for departments and responsible for clients, and all of this is amassed within your accounting system. And it's no wonder it becomes so frustrating, because just getting that data in there in the first place is really hard, but getting it all connected and getting rich data with useful information and useful descriptions, etc., can be really difficult because there's just so much that's going on. So it's really important that you get the right processes in place so that you can actually get in good routines of consistently and reliably producing data from your accounting system in the most efficient way. So as a result of all of the above, the frustrations that you end up with is that you have transactions that no one is able to reconcile. Somehow, despite having live bank feeds and despite having receipt bank capturing all your transactions and zero touch, you have all this machine learning going on with bank rules trying to recognize transactions. And for some reason, there are still transactions that have been sat there for weeks or maybe even months that no one knows how to deal with. And the longer it goes on with an unresolved query in your accounting data, the harder it becomes to ever reconcile that transaction. So often business owners are being chased for the receipt that they didn't produce or the payment that they made that no one understands. And the reality is that it's never ever making it to the top of a busy managing director's priority list. They have 1,000 things to do, and answering the query about what this transaction is never making it to the top of that list. So you end up with transactions that are sat there waiting for somebody to reconcile, and it never gets prioritized, and it becomes very frustrating, because then when you run reports, you've got information that is out of date and not fit for purpose. You might have something simple like duplicate contacts, which doesn't sound like a big thing, but if you can imagine you're trying to run reports based on spend with a supplier, you want to be able to know things like how well you are paying them on time, or customers, how well they're paying you on time. You want to know how much customers are paying you, how frequently they're paying you, and you want to be able to run statements and send them to them. And it can be really embarrassing when you are trying to do that and you're only getting half the story, because there's actually, unknown to you, a duplicate contact, and you've got half their account under one contact name and half it under another, which makes it very difficult for you to be able to get useful information on your customers and suppliers. Again, some of the reasons that this could happen are that your CRM has pushed a contact in, so you've set up some nice integration, which means that when a new contact arrives in your CRM or a new sales order is won, a new contact is created in Xero. But then you've got somebody who's managing the accounts who's creating that customer again, not knowing that they've already been created. Or it's set up to also integrate with your time tracking system, and that's bringing contacts in. So there's lots of reasons why this duplication could end up happening. And another one is just that you make a typo, you go to invoice a customer and you type the name in slightly differently, it doesn't pull through, and now you've got another contact created, and now you've got this misalignment of information across two different contacts for the same person. You might also have some inconsistency about how transactions are being recorded. So you see in this example here, we've got a customer called Smart Agency, and we've got a supplier called Smart Agency, and 1 month we think they're our accountants, and the next month we think they're doing our advertising. It seems like an extreme example, but you get the point, is that if you're then trying to look across a line in your profit and loss account, such as advertising and marketing, and some months you've got the spend on a supplier in there and some months you haven't, then it's very frustrating. It's very difficult for you to be able to see any of the patterns, because you've not got consistency in the way that you are treating certain costs. Then you might have account codes that have become dormant. So you end up this huge list of account codes, and people post into all these different account codes because they're available. But because you've perhaps changed accounting system at some point, or you've changed accountant, you've changed bookkeeper, somebody's tried to create new codes and not deleted the old ones. You've got this huge list, and people are posting things all over the place. One person's posting to cleaner, and the other one's posting to cleaning. And now you're not able to make the most of all the data that's in your account system, because it's just all over the place. One of the common things is that fixed assets don't get registered. So I appreciate this might get a little bit technical for the non-accountants watching, but fixed assets are something that will be shown on your balance sheet, and you'll have a line on your balance sheet for fixed assets. And what you want to be able to do is to run a register against that to see the breakdown of all the fixed assets owned by your company that come to that balance in the balance sheet. And the moment that you run a reconciliation like this and the two don't match, your trust in all of the data across your accounting system very quickly erodes, and you lose confidence that any of the numbers are actually reliable, and you're able to make decisions based on them. So it's really important that your fixed assets get registered in the right way and depreciated over a reasonable amount of time. But if you don't have the checks and measures in place, then this stuff will soon start to slip away and can become very frustrating. You might also have spikes with certain suppliers. So perhaps you're paying a phone bill every month and it's always been about the same amount, and one month it's gone through the roof because the phone company's made a mistake, or because your employee's been using a mobile phone for calls that they shouldn't have been doing. And again, if you've not got the checks in place to audit this, then this sort of thing could be happening regularly within your business and you're not identifying it, which means that you are leaking profit in your business from not being on top of this stuff. So what you really want to be able to do, as we said before, is track spend over time and have somebody actively looking at supplier spend to identify any peaks and troughs that you might need to investigate. So the result of all of that is that it can be very, very stressful. All this beautiful modern technology, all these new ideas about ways that you can streamline and make your accounting systems more efficient, but somehow it's just become extremely overwhelming. And what often happens is that businesses end up going back to very traditional ways of managing their accounts, because at least, although it might take longer before, they knew what they were doing and they could have a view of the whole thing and be in control of what was going on in their accounting system. The way that MAP dealt with this is that obviously we don't want to be going backwards, we want to be moving forward, and we do want to be making use of all this fantastic technology that's available to us, but we also want reliable financial information that we can trust. So we set up our 2-degree reports, which allows us every quarter to produce a report for our clients to show them any of the issues that we've just talked about above that are popping up in their accounting system. And again, this could be through no fault of our own or no fault of their own, but it could be as a result of all the systems that are speaking into their accounting system that are causing things to be out of kilter and causing the data to be inaccurate. So the 2-degree reports help to tighten up all of those gaps and all of those problems so that our clients can have a real-time view of their current financial position, and they can go to bed at night knowing exactly what their position is, what their upcoming liabilities are, and they can actually make decisions based on information that they can trust. So it just gives them that ability to be able to take a step back and understand what's going on in the business in a reliable way. So 7 key elements that I'd like to share on this webinar today are the things that I, as a business owner, like to know about on an ongoing basis, and the things that help me to sleep at night, and the things that we are making sure our clients are on top of as well. So first of all, you want to know about your tax payments. If you've got tax payments coming up for any of your taxes, as a limited company, you're going to have a corporation tax bill every year, you're going to have a VAT bill every quarter, you're going to have a PAYE bill every month, you're going to have your own personal self-assessment tax bill once, potentially twice a year, depending on your situation, and so will the other directors as well. You're going to have something called P11D tax due every year, and the thought of not knowing about any of these liabilities, not knowing when they're going to hit or how much they're going to cost, can be very, very stressful, because you don't know whether that money that sits in your business bank account, you don't know how much of it belongs to you and how much of it is sat waiting for the tax man. And the same in your personal account as well, because you have personal tax liabilities. So what we're making sure is that our clients are fully aware of all their upcoming tax liabilities, whether we can tell them that to the penny at that moment or not, at least give them a date and perhaps an estimate of what to expect. The second thing is your debtors. So this is money that your customer owes you. Agencies tend to work on reasonably tight profit margins, between kind of 5 and 20% typically. however profitable you are and however good the service that you're delivering to your clients are, if your customers don't pay you, it actually counts for nothing, because you can go out of business very, very quickly. And you need to be able to get that cash in to pay your creditors, to pay your staff, and to make profit and be able to take home money for you and your family to enjoy. So very important that you are on top of your debtors, that you know who owes you what, you know who's becoming overdue, and you can start to take action to deal with that very quickly. First of all, putting in payment mechanisms like Go Cardless and Stripe so that you can collect payment easily. Secondly, by having a automated email reminder system like Chaser to send automated emails out to your clients, very personalized with escalation processes and everything, and obviously phone calls on top of that as well by someone managing your credit control. But fundamentally, you want to know that the list of debtors that you're looking at are reliable and you can trust, and that you're doing everything you can to get that money in as quickly as possible, because that can really cause your business to suffer if you're not getting that cash and able to do what you want to do to grow your business. Creditors, again, so this is the reverse. This is you owing money to your suppliers. You want to have access to the best freelancers, the best professionals, the best services, the best service providers to your business as you can. And you don't do that by not paying them or not paying them on time. You want to know that everyone that you need to be paying, you are paying, that no one's going to come breathing down your neck and knocking on your door, unsurprisingly. If you do have an issue with paying a creditor, you want to know about it. You at least want to have visibility of it so you can speak to that creditor in advance and make sure that you're in agreement as to when and how you're going to pay them and manage the relations. Fourthly, you want to know your free cash position. So the first thing that many business owners do when they wake up in the morning, or one of the first things they do, is to check the bank balance within their business. But unfortunately, that's only part of the story. You might have a reasonable balance building up in your bank, but it doesn't all belong to you. You do have creditors, you do have people that need to be paid out of that money. So it's making sure that you understand how much of the cash is actually freely available for you to spend, so that you're not eating into cash that needs to go elsewhere. It's also important to know about your VAT position. The reason we've got this on here as well as the tax at the top is because VAT is the one area of tax that you really don't want to mess about with. It's the one where HMRC will come banging the hardest, because it's the money that they want to collect the quickest. And fundamentally, you've charged this money onto your customers. It's not money that belongs to you, it does belong to HMRC. So making sure that you know exactly how much VAT liability is sat within your business at any point in time. And then director's loan account. So as a director of an owner managed business, you actually wear two hats. You're an employee director of the business, but you're also a shareholder, and you have a number of ways that you transact with your business. So you might be receiving a salary, you might be receiving dividends, you might be drawing money out in the way of a loan, you might do the reverse and actually lend money to your company, you might have expenses to claim, you might have money going into a pension, you might pay for things personally that are for the benefit of the business, so you've got expenses to reclaim, and occasionally you might have had to pay something personally for your personal affairs through the business, and all of this creates what we call a director's loan account. And it's important that your accountant to reconcile that director's loan account so you understand what your position is with the company from a financial perspective and what that means for you in the short, medium and long term, because you have an obligation as a director to track and understand that and make sure that you are following the legislation. And then client and staff entertaining. So there are rules on entertaining your staff and how much you can spend on your social nights out and your nice lunches and all the things that you do to treat and have fun with your staff. You need to make sure that you understand those rules and that you understand when those payments lead to tax liabilities, so that you're not tripping yourself up, but also not tripping your staff up. It's lovely to take them out for a nice meal and some drinks, but then when they find out they're going to be taxed for it, they might start to think differently. So making sure that you understand the thresholds for that and when you're about to go over those thresholds and it's going to lead to a tax liability. And then client entertaining is something that people often misunderstand. But firstly, you can't claim VAT on client entertaining, and secondly, it's not a tax deductible expense for your business either. So that, again, that might make you think differently about all the money that you're spending on taking your clients out for coffees and beers and nice lunches. But just to be aware of the rules around that, and to understand the position on your client and staff entertaining throughout the year. So one of the things we've created recently is our scorecard to help you to rate your finance function, and that will help you to understand how the things that you've got in place, the routines you've got in place to run your finances, how well they score against a comprehensive list of all the best practices that Matt believes that you should have in place. So you'll receive a link to that scorecard within the next 24 hours. Just jump on and answer 10 simple questions. It'll take you 3 or 4 minutes, and you'll get a report showing you some advice about how you can improve on your current finance function. And you can start to take action from there, so you can start to get more reliable and consistent financial reporting in your agency, enabling you to make better decisions. That's it from me today. Today was really about laying the foundations when your finance function, maybe some of the less glamorous parts of running your finances, because this is all about collecting the data, recording it and analyzing it in the most efficient way, so that when we move to the next stage in your business, you can start to use that information to produce insightful and telling reports to understand where the profit opportunities and profit leaks are in your agency, so that you're not just constantly looking to grow something that is fundamentally not making money. If any of you have got questions, then please feel free to pop them in the chat, and I'll be happy to answer all of those. As I say, they're all of our social media profiles, so feel free to follow us and communicate with us after today's webinar. Okay, we haven't got any questions, I don't think. Beth's telling me. No. Okay, we've got no questions at the moment. I'll give it another 30 seconds and then I will leave you to get on with your day. I hope it's been useful. We'll be sending out the slides after the event, as well as the link to the scorecard. Feel free to drop any questions over email as well when you get those, or over social media, as we say. And if you jump into the Facebook group, there are a vast array of resources there that are available to you for free. All sorts of tools and templates for you to use very quickly within your agency. And if you need help with any of those, then just let us know. Okay, guys, doesn't look like we've got any questions now. So I'm going to end the webinar here. Look out for the email coming through and let us know if we can do anything to help. Have a great afternoon. Thank you.